Permian Resources begins trading today. It's the combination of Colgate Energy and Centennial Resource Development. It was about a $7 billion merger of equals that took place recently. We're joined at Post 9 now with Permian Resources co-CEOs James Walter and Will Hickey. And by the way, we should point out, stock now trades under the ticker PR. Guys, nice to have you here. I'll throw out the first question. Let either one of you decide, given your co-CEOs, which one wants to answer it. But you are talking about, planned activity levels, therefore targeting crude oil production growth of about 10% in the fourth quarter of 2023 over the fourth quarter of this year, and the possibility of generating as much as $1.1 to $1.3 billion of free cash flow. So just give me a sense as to why you're confident in that 10% growth number, fourth quarter to fourth quarter, and the free cash flow numbers you put out there.
Yeah, I mean, I'll take that one. So currently, Permian Resources is already running the 6 or 7 drilling rigs that we need to execute on that growth plan. Both businesses were growing pre-merger, and we feel very confident in our assets in the Delaware Basin. We're in the best basin in the onshore U.S., and we have some of the best assets in that basin. So really, this is just continuing to execute on what both companies did pre-merger with the new team, and we're very confident that this new team together will be better than either one was kind of before the deal. Speaking of team, and I know Jim's going to have a lot of questions for you, how are you guys apportioning the co-CEO roles? Because, to be frank, sometimes those things don't work that well. And I'm sort of curious as to the conversations you've had and where you see each of your responsibilities being to allow you to actually work well together.
Yeah, so Will and I have been co-CEOs for the past 7 years, so it's worked really well for us, and it's really natural. Like, Will has a technical background. He spent most of his career prior to starting Colgate at Pioneer Natural Resources, so he oversees engineering, production, operations, geology, and I've got a transactional background, so M&A, legal, land, and it works really well. I think it's been a great part of our success story.
Jim?
All right, so James, it sounds like you're right from the beginning adopting a pioneer-like method of payout. You are determined to give the shareholders cash flow. Can you speak to that? Because in the old days, of course, it was drill, drill, drill. These days, you seem to be very much favoring a position where you have 10% growth, which therefore allows you to return an amazing amount of money. Any thoughts about what kind of, at these prices, yield you might have?
Yeah, I mean, so I think we're in the unique position. We can grow and return meaningful capital to shareholders. I'd say returning capital is in our DNA. We founded the predecessor to Permian Resources with the sole goal of maximizing investor returns through distributions. So we're really excited. And I think I don't know exactly today. I think you're probably looking at about a 14 or 15% all-in return of capital yield with a dividend yield that's approaching 2.5%. So yeah, like you said, Jim, I think it's really competitive, and it's up there with a lot of the big boys in E&P.
Well, Will, you should know that my charitable trust is incredibly overweighted with oils because we absolutely love that return. At the same time, we feel that the market has not been very kind to the group. Reuters reported in December of 2021 that Colgate sponsors were exploring an IPO. A better way to be able to come public than an IPO?
Yeah, I'd say this transaction was way better. I mean, I think that the assets that the Centennial transaction, the people that brought, this really builds a bigger, better company than we ever could have done on our own.
Well, if that's the case, is the idea to, let's say, put contiguous areas together and therefore take advantage of the idea that, as we've seen time and again, say with Pioneer, that if you can just take the same number of rigs, move them over, the expense structure is really terrific.
Yeah, definitely. I'll take that one. I mean, as you look at this merger, we're definitely cutting a lot of costs out of the business, from a little bit from the headcount perspective, but really from just operational synergies. Both businesses were very, very good at what they were doing pre-merger, and we've been really surprised as we kind of laid best practices next to each other. There's a lot of extra fat we can cut, and we can adopt the best things that Centennial did, the best things that Colgate did to really set up Permian Resources for success going forward.
And on the kind of the longer term answers. Sorry.
It does feel like I was afraid that you paid too much for it, and clearly not. I mean, the market is saying right now that we're thrilled with the combination, and I think, once again, it's because that yield you just mentioned makes me feel like people can get great yield right here from the patch. How many years do you think you can sustain something like that? Pioneer is saying, Mr. Sheffield's saying many, many years before they have to worry about cash flow declining, as long as oil stays above, say, 75, 80.
Yeah, I mean, I think we can sustain this production level for decades. We have one of the highest quality assets in the entire Permian Basin, which, like Will said, is the best basin we think in North America. So, I think at $75 or $80, we can sustain this really indefinitely.
Indefinitely. I mean, now, of course, the demand overall over time for what you're producing may decline.
Yeah.
Given the proliferation of electric vehicles.
Yeah, and I was using the $75 to $80. I think we feel good about the demand side too. I think we're in a period where we're seeing the results of years of underinvestment in the space. That's it doesn't look like that's changing anytime soon.
So despite what may be lower demand over a long period of time, you feel like you're well positioned to go out well past, let's call it, the next 10 years?
Yeah, I mean, just being in the lowest kind of break-even basin in the onshore U.S. with some of the best assets in that basin just gives us a lot of confidence that we'll be one of the last ones standing.
Guys, appreciate you stopping by. Congrats on the deal. Thank you.
Thank you all.
Awesome. Thank you all.